Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So I feel like I haven't had much to say until now. We've finally started to consolidate a little bit, get a nice little chunky pattern to check out. I've been watching the market caps of everything lately, more for my own entertainment than anything else really. But it's interesting how these bottom crap coins are jostling around here. Also interesting that Ripple's still holding above Ethereum. I think Ethereum's in some trouble going into 2019. Talk about that a little bit. Bitcoin doesn't have the regulatory overhang potential that Ethereum does based on the ICO long arm of the law that's ready to pounce on that stuff. Looking at difficulty for Bitcoin, we've had basically a minus 34% change in the past month. So the next difficulty is actually due in less than 2 days. It's going to be 11%, so 7, 15, 11, 30 to 34%. That's pretty substantial. It's the greatest reduction we've seen ever, I'm pretty sure. I didn't go back beyond 2011, but pretty sure it's the largest consecutive reduction, at least since 2011. I think what we saw throughout 2018 was the buzz finally catch hold of a lot of people, and these things take time. ASICs take time to make, to ship. These farms take time to set up. This is like a physical networking task. So we had all that throughout 2018, and regardless of the price. So there were miners coming online throughout 2018 who, for whatever reason, weren't profitable below 6,200, whether it be electricity costs or the miners they were using, or a combination of both. They couldn't pay electricity bills. What are they going to do? They have to shut off. That's really what all it comes down to. I mean, they don't really care, if they can hold the Bitcoin, they will. If they can keep mining, they will. But if they can't pay their electricity bill, then they just can't keep mining. So I think that's a lot of what we're seeing. It's not an original thought by any means. It's just a way to rationalize what we've seen, I think, throughout 2018 as far as the mining is concerned. And I think it's actually a good thing. It's a type of capitulation that we can look for. Can it go lower? Of course it can go lower. If price goes below 3,000, things are going to get real interesting for a lot of big miners who will have that squeeze even harder on their profitability. So let's look at some charts. Start with the Bitcoin. A few people are asking me about the pitchfork. It's dead, so we can forget about it. It was a good run from 2015 to 2018. Someone can make a nice gravestone meme for that, but yeah, I mean, it's clearly done ski. I mean, we can always go back into it, but that probably won't happen. One of the things I'll highlight is just the insane amount of consolidation it's going to take to get above 6,200 again, based on the amount of time we sat at 6,200. Price has memory, chart has memory, people have memory, all these things. If you look at order blocks or VPVR or any of this volume stuff that's going around, all of it comes down to how much time were we at a certain price level is how much time we're likely going to stay at the price level if we revisit that level. So if we revisit the 6,200 zone, we're probably not going to just shoot through it. We're probably going to sit there for a good amount of time, 3 to 6 months, I'd guess. So let's look at the weekly cloud. The first thing that stuck out to me on the weekly cloud, even before we broke down, is the TK disequilibrium. And you might be thinking to yourself, wow, it's huge. It's got to touch the key gene eventually. It does. But as you can see, throughout 2014 to 2016, it almost took 2 years basically for the price to mean revert, and that also took the Kijun to average down. So you can see it touched in between May and September. And if you have no idea what I'm talking about, it's just mean reversion of EMAs basically. So when they're spread far apart, it says, be careful going short here. It's more likely to either go sideways or return to the mean than it is to fall lower. Weekly is a big time frame. A lot of things can happen. And obviously we fell lower regardless of the distance here. But what I'm getting at is what we're going to see is this massive expansion of the cloud within the next few weeks. To me, this always looked like a map of the United States without Florida. It's not Texas, whatever. And back here in September of 2015, I was talking about this edge-to-edge thing. That's, again, something, this is probably 6 months to a year out at this point. 2 years out, maybe. What this could be over here. We'll probably see another type of ascending triangle if we do go up again. Around the 6,200 would be the ceiling of that. But this is like way out. Not predicting anything, just these are the types of things to look for in the cloud. So I'm just highlighting these zones, how it was thin, and then we got this massive cloud expansion. So not too much on the weekly. Again, that 6,200 zone is going to be massive. If we go to weekly 200 MA, a lot of people talking about this. Not an original thought by me on any means, but you can see the 200 MA is held up the prior 3-4 times it sort of hit. Can it hold up again? Sure. The daily 200 didn't hold. Another thing I'm looking at is oscillators on high time frames. So weekly, this is the only time it's ever touched below 20. You can see we're grazing 20. Maybe it's at 21, forever 21. I don't know. But it's low enough in my book. It can certainly go lower. It always can go lower. Stoke's also near record lows. I mean, it's an oscillator. It can't really go below 0, but it's pretty close to 0. What you're looking for is a cross above the 20. So it can do whatever it wants, like below 20. But as soon as it crosses above 20, that's when you can say it's game on like Donkey Kong. Otherwise, it's kind of can meander down around 0 to 20. But it's something to look for as well. Just you can see how low both signals are. Very low. So all of this speaks to the probability of bearish momentum waning. If we go to the daily cloud, we can see a C-clamp, one of the biggest ones ever. It's around 22%, I think. Again, this says the probability of lower lows is much lower than the probability of mean reverting or going sideways. Two options here. This can go sideways, and Kijun can come down to meet it, or price can go up to meet the Kijun and decide from there what it wants to do. That's called a Kijun bounce. First, it's going to find resistance at the Tenkan, which is this blue line. But you can see as these things go flat and sideways, that's a bullish indicator. In this case, because price is below those items, those metrics. You can see here the Tenkan or the Kijun was flat, for like 4 months, and price was all over the place. But in both instances, it came back to it. It came back to it here when it was flat. It came back to it here when there was a C-clamp. This was a more obvious W bottom. We broke the Tenkan, broke the horizontal, and reached for the Kijun. Here, what I'm seeing is a falling wedge, bullish reversal pattern, possibility, potential. Looking at the daily without the cloud, you can see there's a bullish divergence. Definitely, we're getting lower lows on less momentum. Again, this is waning bearish momentum. These are colored poorly on the Stoke, but there's a bullish cross here. Again, it doesn't mean too much until it crosses 20, which it can do very quickly. Stoke is a very fast oscillator compared to RSI. It's basically the speed of RSI. This is showing a pattern that's nearly complete, showing declining volume, which is also another type of divergence, bullish divergence. So all of this to me speaks to potential for a nice relief rally. On the 4 hour, you can see that div, bull div, just play out even better. Just because as we're getting successive lows, we're just not, the momentum just isn't there. Price is certainly going lower, but RSI is telling you it's nowhere near the thrusts that it was previously, which is kind of obvious. I mean, it's been pretty choppy in here. This stuff up here was, who knows, but it could have been Craig Wright, could have been Roger, could have been Jihan, could have been any big miner selling to hedge for the lower lows. It could be them selling for their Civil War, whatever it was. It was right place, right time. And when things are sideways like that, anything can light that up. You can say it was a descending triangle. That's fine. If you were short from 6,400, congratulations. I've only been short on the way down, but my problem's been not holding long enough. It's been choppy-ish. You know, what I was seeing here was a W that didn't go anywhere. So we go lower. And we got this head and shoulders at the bottom, which does happen. So just be aware of that. And went lower. But all the while we're forming this this wedge. So what does the trade look like for that? You can either put your stop loss just below the lowest low, or maximum really should be to the 1.272, depending on your leverage, how much pain you want to take, whatever. So anywhere between 31 and 28 would be a stop loss zone. The most aggressive stop loss would give you a 15 R&R basically. The target for the falling wedge should be the highest high in the wedge, which in this case is 4,400. I don't think we'll get that high. I think we'll go to the Kijun and then bounce down from there. I like the 4 hour. Sorry, not the Kijun, but the cloud. I don't think we'll make it past 373. This is another setup you can trade, the edge hedge, besides the falling wedge itself. So if we get above 3783, that'll be the first time we're above the 4 hour cloud since we dropped below 6,200. So that would be particularly bullish. I don't think that'll happen. And then also for the 4 hour, this is really loose pitchfork, but you know, high here, and then there's really nothing you can draw because it's so steep. But anything above this 36-ish level would be bullish, similar to the 4 hour cloud. All right, let's talk ETH a little bit. So the big thing for ETH is the Constantinople hard fork about mid-January, depending on how the blocks pan out. What that hard fork mainly is going to do is reduce issuance from 3 to 2 ETH in the block reward, which is pretty substantial for profitability for miners, especially proof of work. If we look at ETH difficulty hash rate, you can see it's basically declined by 50% since the high, and it's likely to go lower, I think, after the hard fork, unless price moves up substantially. There's a few variables in profitability. As long as block time is flat, that's not really a variable. Difficulty is a massive variable. Block reward is a massive variable. Price is a massive variable. Transaction fees are a variable. So all those things need to be taken into consideration. But in general, when you're dropping block reward that much, price has to move up to compensate, or else profitability will continue to take a hit. If we look at profitability now, it's literally sitting at all-time lows. So this is going to squeeze the network super hard before the proof of stake 50-50 Jasper, Casper, I don't know what they're calling it, Shasper, whatever. Eventually it's going to be 50% proof of stake, 50% proof of work, kind of like Dash is now. If you're not familiar with Dash, you can check it out. Check out my article on BraveNewCoin, talk about it there. It's a cool system. I don't like Dash as a coin to buy, but it's cool, interesting that like it does work on something. So it's not completely new in the realm of crypto. Anyway, mining profitability at all-time low. Let's look at some charts. So the story of ETH has been the classic white markup, Wyckoff cycle, where it's ascending triangle, flag, ascending triangle, flag, and then make a decision. Okay, now we have head and shoulders, great, now we have a W, head and shoulders, and then since this, May, it's just been continually consolidate, break down, consolidate for a couple months, follow the breakdown of Bitcoin, and we're below 100, the psychological level of 100 now, so that's going to be big resistance. If ETH makes lower lows, it's going to hit 50, almost guaranteed. Again, if you're talking about order blocks, VPVR, whatever, prices, memory, yada, 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 support becomes resistance, resistance becomes support. Or it was resistance on the way up, it will become support on the way down. There's a big zone of consolidation here, so there's a big order block. Sure, whatever you want to call it. But the psychological level of $50 is definitely going to be a concentration of bids there, most likely. So whether it drops and chills there or drops and bounces up, whatever. But it's if it does make lower lows, that's where it's going. Almost certain. Based on psychological levels and order blocks and blah, blah, blah. Like, it's no coincidence that it consolidated there on the way up. So it would most likely hit that level on the way down. But much like Bitcoin, this is looking like a falling wedge situation, which is a nice bullish reversal. It's also extremely far away from the daily 200. Just another type of oscillator mentally that you can say to yourself, what are the odds of going lower past the 200? I mean, it's certainly possible. This is crypto. Crypto's different than a lot of stuff. But, on the way up, it hugged the 200 fairly nicely. A bunch of hits on the way up. So it's been since May that it's been even near in the same 3 football fields as the 200 EMA. So if this goes lower on that, to me, that's a definite buy because it's due even harder for a relief rally. If we look at Cloud and RSI, there's a bull div. There's a really tight wedge on ETH. Again, C-clamp, TKC clamp, one of the biggest ever on ETH, if not the biggest ever. Very similar to this situation. We just get completely slobber knockered below the Tenkan. Just, when it rides the Tenkan, that's bearish, but when it outpaces the Tenkan, that is really something. Here, it rode the Tenkan pretty much, right? And then it just gets obliterated. ICOs are selling. Mom and dad who bought $200 higher are selling. Everybody's selling, right? So it just is another type of capitulation you're looking for, or oversold sentiment, oversold bearish momentum waning, blah, blah, blah. So it's not unreasonable that we get the same type of situation we did here. 150 is almost a 2x from here, which seems like a lot to me, but it's really not had a bounce since breaking 180 or whatever it is. 150 is also the 145-ish. It's the 50% from high to low. Very reasonable that it reaches that level. I don't have it on here, but ETH shorts are finally net long for the first time in years on Bitfinex, which is interesting. Longs on Bitfinex are also very high. Overall, open interest on Bitfinex for ETH is extremely high, if not all-time high levels. So something's got to give pretty soon if we move in either direction. We're going to see stuff unraveling pretty quickly. I think the moves are going to be quick for the next this breakout, just because everybody's in a position. Lots of people are long, lots of people are short. Watching the Maker Die CDP has been interesting. Check that out if you don't know what I'm talking about. But if we get below 70, there's a bunch of liquidations there for that product. So things could get real interesting below 70. And then lastly, 4-hour cloud for ETH. It's painting 104, pretty nice, flat Kumo, edge-to-edge potential. It's got to get to 88 around the 21st. So it's got less than a week, basically. If it just goes flat for a week, it's going to hit the cloud, and we're going to be at 104 pretty soon, and Bob's your uncle, right? But if not, we're going to get lower lows. That might sound like I'm saying we're going to go up or down. I'm not. I'm saying if, then, blah, blah, blah. It's all a tree of decisions, my friend. That's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.